Yeah. What is a syndication exactly? It's a.
Yeah. So I mean, I'll try and dumb it down as much as I can, but it's a larger partnership between multiple members, where we're basically pooling money together from
Mhm.
various investors, and then using that money to close on a larger deal. But also, there's some assigned roles, we'll call it. There's kind of the main group operating the actual deal, so they're finding the deal, they're running the business plan, they're managing the deal. That's called kind of the GP, General Partnership Group.
Mhm.
And then with the help of limited partners coming in, with their capital, you're then all able to kind of come together as one big family and close on a deal.
Hey, everybody! Welcome to another episode of Real Estate Investing Real Talk with your host, Sherwin G.
What's up, everyone? Tyler here.
Hey, how's it going, Tyler? How you doing?
I'm good, man. Just chilling on a nice Wednesday morning here,
Yeah.
and Sherwin has the University of Hawaii hat on because he's going to Hawaii today, or no,
Yes.
tomorrow.
Yeah. Tomorrow. Plus, got to represent the. I don't know when this episode's coming out officially, but just a couple days ago, the men's volleyball team won the national championship by beating BYU. So also representing
Oh,
that.
I
So
didn't even know that, man. Congrats to UH.
yeah, I don't watch volleyball, but my sister texted me and was like, "Hey, did you watch a UH volleyball? Yeah. What did we win? Yeah. So congrats. So
That's awesome.
whatever.
That's
Yeah. Cool.
awesome.
Well, we're excited about this episode today. This is what, episode 6, I believe.
Episode 6,
Yeah.
even though we have multiple episodes with a couple parts to it, but yes, this is technically episode 6,
Yeah.
and just kind of going on to recap of what we did last week, or in episode 5. Pretty much we talked about the importance of having multiple income streams, and the
Hmm.
fact that, I mean, most of the wealthy people of this nation have, I believe it was 7 income streams according to the IRS. So yeah, obviously wanted to stress the importance of having multiple income streams. And yeah, anything else you want to touch on from the recap of last episode, Sherwin?
Yeah, that was we talked about different ideas of how to build different additional income streams, and we also touch on, one way of obviously is real estate investing, but within that real estate basket, there's different types of way to invest in real estate to build passive streams of income and wealth. Like, you could do flips, house hacking, burrs, and which leads us to this episode, which is syndications,
Syndications,
which
baby.
is yeah, which is kind of exciting because that first batch of episodes was sort of like our first chapter of our
Mhm.
show, sort of like our introducing the audience to our real estate journey.
Yep.
We
Who
went
we
over
are,
kind
where
of
we
like,
come
yeah,
from,
who we
why listen
are, our
to
experience.
us.
Exactly. So it's just you and
Yep.
me kind of just chatting away. So thanks for people who are supporting us and liking and subscribing, because we officially launched this was it a few weeks ago, or maybe a week or two
I
ago,
think it was
right?
a week and a half ago. Yeah. Luckily, we recorded a bunch of episodes prior to, but our
Yeah.
big launch was about a week and a half ago, and we have 35 subscribers, Sherwin. So,
Woohoo.
I'll take it. I'll take it.
Yeah, I know. It's exciting. And, you know, you and I were just talking about this. The first episode's really rough.
Yep.
But we're trying to get better and better, guys. So please bear with us. We got better camera equipment, maybe better mics and everything. Tyler
One of these
combed
days, I'm
his
gonna get
hair
it
so he
better.
looks more professional.
You
I'm
probably
still wearing my hat because I can't really.
if you've been watching since the beginning, I finally have a background now, which is good. My camera's not the best. I got to figure that out.
Yeah,
So one of these days when we get bigger, I'll get a better camera.
yeah. Anyways, that's enough blabbing. They're probably like, okay, guys, let's just
Yeah,
fast forward to the
exactly.
good
But
stuff.
but wait,
Hopefully there's good stuff.
before we go into it, Sherwin,
Oh
about
yes.
syndications, I do want to shout out Daniel Godbout.
Mhm.
Godbout. He was our very first commenter ever of any of our videos. So shout out to you, Daniel. Thanks for watching. Thanks for supporting. We appreciate your engagement.
Yeah, I like this comment too. I'm gonna read it. It says like, "Great kickoff episode, just the right amount of awkward. Stay thirsty."
Love it. I love it. I read that too, and I was like, I agree.
Yeah,
Awkward, funny, weird, but
yeah.
we're starting.
So if you guys want us to give you a shout out, comment below. anything funny, anything weird, we'll take it, and maybe we'll give you a shout out on one of the episodes soon. So
Yeah.
yeah, on that note, this this next kind of chapter and series is sort of something that you and I are sort of passionate and have experience about the syndication world. So
hmm
this is sort of like the next chapter or season of our show, I guess. I don't know how you want to call it, where we have a few couple episodes sort of lined up talking about real estate syndication.
hmm Yeah, I mean, I think going into this whole YouTube project, I think Sherwin and I decided that we really wanted to focus on some of the asset classes that we are really experienced in and actually want to keep exploring more and more and more. And that really is the larger multifamily syndication space. So, with that being said, this is kind of our, as Sherman mentioned, our chapter 2 in this phase of our YouTube channel here. But this video today is literally going to be titled like, what is a syndication? So we're going to tackle all of the basic questions and talk about how we got into this world and the benefits, the pros, the cons of being, involved in these multifamily syndications where we're basically pooling money together from investors to acquire a larger asset.
Yeah. So what is a syndication exactly? It's a
Yeah. So I mean, I'll try and dumb it down as much as I can, but it's a larger partnership between multiple members, where we're basically pooling money together from
mhm.
various investors, and then using that money to close on a larger deal. But also, there's some assigned roles, we'll call it. There's kind of the main group operating the actual deal, so they're finding the deal, they're running the business plan, they're managing the deal. That's called kind of the GP, general partnership group.
Mhm.
And then with the help of limited partners coming in with their capital, you're then all able to kind of come together as one big family and close on a deal.
Yeah. Yeah. I tell, and whenever investors ask me, or not just investors, just other people in general, friends and family, hey, what's a syndication? What's a real estate syndication? And it's really just a fancy term of saying it's a
It's a
group
fancy
investment,
word.
right? It's a
Yep.
group. It's like you mentioned, it's an effective way for a group of people to pool their financial and intellectual resources together to invest in properties and projects much bigger than they can normally afford or manage on their own.
Yep.
And that's how we sort of kind of roll into sort of the benefits of investing in a syndication. But yeah, that's sort of a syndication in a nutshell, right? A group of people investing in a bigger property or project, and in
Yep.
our case, a big commercial real estate property.
Yeah, and this has been around for a while. It's not any by any means anything type of any new mind blowing strategy.
Yeah,
I mean, as you mentioned, even Sherwin, like the Empire State Building was a syndication back in the day, and it's really, again, bottom line, it's partnership between
yeah.
multiple groups and parties coming together to close on a
Yeah.
property. So
Yeah. The funny thing is, not too many people know about it.
no,
That's,
I didn't know about it until a few years ago, but
yeah.
because my plan all along was just to buy properties on my own and cash flow them and have 100% equity. But
Yeah.
um, so Sherwin, maybe because you're the more experienced GP of us, of our tandem here.
Of the two.
I was gonna
No,
say
no, no, not the more experience of it. No.
of
Yeah.
of us too here.
Yeah.
Um, so why would you invest in a real estate syndication?
Well, this is what I tell investors all the time. Not all, if they're asking, yeah, what's the benefits, right? I mean, it's great because since we're investing as a group, we're able to present opportunities that make it affordable for people to invest in properties passively, so they can sit back and relax, and, well, sit back and
Yep.
collect, I don't know about relax, but sit back and collect double-digit returns and appreciation with a protected and secured asset. And what a lot of people don't know, I mean, there's all this preconceived notion about investing in real estate where I need a lot of money. And what's great
hmm
about real estate syndication, or getting involved in a syndication, is that the barrier to enter a syndication can be less than if you were to invest in a real estate property on your own.
hmm
And there's all, I mean, why did you want to invest in a
Well,
syndication?
yeah, I mean, to that, just to hit on that point, I mean, I remember I was putting down, 50K on a duplex back in the day. And yes, again, I had 100% ownership of that duplex, but I was a landlord. I had to find a property manager. I was stressing every month to make sure that my tenants were paying on time. So that money could have also been used in a more passive manner with the syndication route. So I guess to answer your question, Sherman, like why did I get into syndications from the get go? It was more so a couple of things. I wanted to, first of all, just learn more about that larger residential space. I
Mhm.
wanted to learn about how to take down larger deals. But most importantly, it was about time for me. So I knew that
Mhm.
if I could find the right operators and general partners to work with, I could literally just exchange my capital, get some equity, not worry about anything because they're handling everything for me.
Mhm.
Get that quarterly distribution, and then hopefully, by the end of 3, 4, 5 years, whatever the business plan is, get a nice little payday at the end. So for me, I always go back to this. And I think I've mentioned this 10 times on this YouTube channel already. But like one of my favorite quotes is always start with the end in mind.
Yeah.
And the end goal for me is to really, again, from a selfish standpoint, make money, but not have a ton of responsibility. And so being in the syndication world as an LP to start off at was the solution. It was again very passive investing
Yeah. No,
and
that
getting
that
so much time back. Like I'm not having to deal with my property manager or
yeah.
tenants or repairs or anything like that.
Yeah. No, that's great you brought that up because there's actually, there's four kind of main excuses that I hear all the time about people, making up or not wanting to start investing in real estate. And we'll go throughout the four and sort of see how it relates back to syndication. But you mentioned one of them was I have no time to invest in real estate, which is true. A lot of people have full-time jobs, they have kids, they have family, or they just don't want to bother dealing with the residents, dealing with the
Mhm.
property, and so forth. And what you brought up was, you know, one of the benefits of investing in real estate syndication on the LP side is the factor of time. And let's dive more into like this LP and GP. I know you kind of briefed it on, earlier uh, in the show just a couple minutes ago. But how is this real estate syndication structured? Right? So it's made up of two groups, and you mentioned the general partners
Yep.
and the limited partners, right? So the general partners, or the GPs for short, or sometimes also called the sponsors or the operators.
Operators.
Yeah. So what the general partners do is they do all the work to acquire the commercial real estate property. They secure the financing and they manage the property and execute the business strategy and the plan.
Yep.
While the limited partners, or LPs, are the passive investors who bring the capital to the deal. And in return for their investment, they collect equity or debt returns and appreciation that's backed by a hard asset,
Yep. And the
that
cash
property.
flow.
Exactly.
Yep.
Right. So when we talk about the LPs and GPs, and yeah, and to your point about, you know, time being an excuse, well, if you invest in a syndication, the GPs are doing all that work on your behalf.
Hmm.
It's truly passive on the LP's end because they're literally just investing their money and, you know, relying on the operator, the GP, to execute the business plan to make sure they perform and meet or exceed the performance numbers that that was you know that was promised, or that's in the offering memorandum, right?
Hmm.
That they projected, not projected in the offering memorandum.
Yeah, I would say as an LP, it's really the only true passive investing strategy in the real estate space because like even myself as a landlord who owns some properties out of state, I still have to manage my property manager. But again, if you can properly vet those operators to work with, it truly is passive when you have literally zero responsibility.
Yeah,
So
yeah,
it's beautiful,
yeah,
in my
yeah,
opinion.
yeah, yeah.
This is not
So
financial advice. We're not lawyers or
no,
financial
yeah, yeah,
advisors.
exactly. I mean, speaking of that, speaking of lawyers, just to dive in more how it's structured, we have the two groups of LPs and the GPs, right?
Yep.
And this is how my team sort of structures everything, where each property is held under a LLC, or limited liability um, company,
Yep.
right? And then every property has its own checking account, so each property is its own separate business, right? And then so the LLC holds this property, but above that LLC is a parent LLC that sort of have these other LLCs that own the property. So it's like the parent LLC, the children LLC, that owns these different properties. So when you invest in a syndication, the LPs are actually part of this LLC that owns the entity. I don't know if that makes sense, but
Mhm.
it's that's how it's sort of structured in a nutshell. I don't know if I'm explaining it right or not, but I mean, or clearly, maybe you want to touch a little bit more to make it a little bit more clear.
No,
Yeah,
I think you did a good job there, and in terms of the deals that I've been involved in, it's been structured the same exact way. I think maybe you and I even have been using the same syndication lawyer, perhaps. But
yeah.
uh,
Shout out to crowdfunding lawyers. That's why
oh
we
yeah, exactly. Yep.
little plug
So
there, right?
what I would say is, if you're looking to look more into the legal structure of how these are built, obviously just some quick research online, but
Yeah,
what you explained, Sherwin, is pretty much the basic structure
yeah,
of how a lot of these syndications
yeah,
are run
yeah.
and structured. So,
But that goes back to your time, the time excuse, where as an LP, you don't have to worry about structuring
oh
all these
yeah,
LLCs because the GPs manage it, and with our lawyers on our end.
yep,
So that's sort of like, I get that, because what do GPs really do? So
yep.
even before the deal happens, right, or even like there's a lot of stuff that happens to set up the deal that we can present to the LPs, and one of them is structuring, the LLCs, coordinating with the lawyers back and forth, all the documents and so forth. But
And by the
that's
way,
a
that
beauty.
costs money too. That costs money to structure your
Yeah,
deals.
exactly. It costs money to do all that. Costs money to do all the secure the financing back and forth. There's a lot of stuff that happens even before a deal gets realized. Because
Earnest
me
money
as a GP,
deposit, dude. Earnest money
yeah,
deposit.
EMDs and so forth.
Yeah,
Even all the research and due diligence of us, like
just finding the
vetting,
property.
vetting properties, underwriting the properties, making sure is this going to make sense for our investors or not.
Yep.
All that time we go visit the properties, go check it out, and
Yeah.
if it's worth or not, then we make an offer. But all
Yeah.
that happens on our own time and our own money, and then we can present it, to our investors if it makes sense. That's what they're looking for, the types of returns. But all that time factor, that's all handled by the GP side. So on the LP side, you don't have to do any of that, right? And that's what's great.
Yeah.
That takes care of that one excuse, no time,
Yep.
right? You
Yep.
want to talk about I guess another excuse, the second excuse that people usually have, so they have no time, and one of it, we talked about a little bit earlier, like no money or not enough money to invest
hmm
in real estate. You want to touch on that point and how it maybe relates to syndication?
You're talking about the time part or the money part or the
Money,
knowledge part?
money, money
The money
first.
part. So
Yeah,
the money part, I kind of touched on it very briefly earlier, but again, back to the fact that me personally, I don't have enough cash to go out there and buy a 100 unit in Phoenix right now by myself.
you're
I
balling,
don't
right?
have that kind of cash myself.
Don't you have that
But
tech
but
money?
as I mentioned and Sherwin mentioned earlier, the fact that you're coming together as a group of sometimes dozens of other investors, pooling your money in relatively smaller chunks, amount to a larger chunk, we'll call it. So
Yeah,
the barrier to entry is to get an asset and control an asset that's worth tens of millions perhaps, is pretty minuscule when it comes down to it. So again, it's the power of pooling money together, in my opinion. Barrier to entry is relatively low, again, compared to the asset that you're going to be able to control and have equity in. And then also the whole fact that you're just going to be adding value, hopefully, to that property too, and raising the value. So you're controlling a small piece of a big pie, instead of I guess a big slice of a small pie.
yeah, no, it makes sense. And I get this question all the time from, it's like, well, hey, what's the minimum to invest?
Yep. Yep.
Right. So for my group, Flight, usually our properties or our investments, they range from 25K to 50K. We're averaging 50K minimum for most of our
hmm
deals. It depends on the amount of the capital raise that we're doing. Say if we're raising like a $5 million, we probably may bump the minimum to 50 or 100K
Yep.
just to control the number of investors that we can get in deal. We do make exceptions for people who maybe want to invest less than minimum amount on a case by case basis. But that's what's weird about syndication. You talk to the operator, you talk to us, the GPs, and we can work out something that works best for both of us and beneficial for both of us, both the investor and us as the operators and GPs. Because at the end of the day, we're here to help each other out to make sure that your goals and returns and are realized at the end of the investment period. So that's sort of the range. I don't know what you've seen out there. I mean, some are
Yeah.
higher if the raise is higher. I've seen some that are 100K minimum
Yeah.
and so
I,
forth.
I've
But
seen the same exact range. The first deal I ever got into was a minimum of 25K, but most of the deals that I've been a part of, including as a GP, have been 50K minimums. And I've seen deals where they're 100K minimums as well. I think
yeah,
some of the more established companies, we'll call it, that are doing and acquiring larger buildings that are worth 10, 20, 30, 40 million, that kind of range, they're going to
mhm,
be, requiring a larger minimum. Because also on the GP side, it's ultimately, you want a good core group of wealthy individuals that are investing with you. And it doesn't make sense to have dozens and dozens of smaller investors. So sometimes those minimums do get raised over 100K, depending on
yeah,
the deal and the experience of the operators and the company and their strategy.
yeah, and 25, 50, 100K. That's a lot of money for some people. But
Oh yeah.
go back to the no money, not enough money excuse.
Yep.
You were invest on the deal on your own. So we're in the Bay Area. So
Yeah.
$1 million home or property doesn't have to be single family. It could be a multifamily, whatever. It's $1 million. You got to come up with at least 20% down.
250K right there, dude.
Yeah,
200K
yeah,
just
yeah,
to acquire a property
yeah, yeah,
that's not going to cash flow.
yeah, exactly. Yeah, 200K to come up on your own,
Yep.
or invest in a syndication with a group of people for as little as 25K.
25K.
That's what we meant when we said earlier the barrier to enter is a lot less,
Yep. Yep.
than if you're
25K.
entering your own. And a lot of
And
people don't know that. They're like, oh, I didn't even know that, because a lot of people are like, I didn't even think about investing in a group, because investing in a group is hard. You got to trust the people, you got to
yep.
trust the sponsors, you got to trust the team, and so forth. But but that's what goes on to, I guess, it's a nice segue to the third excuse that a lot of people have, right? So we have no time, no money or not enough money, and you kind of touch it earlier. You mentioned it earlier, none or not enough knowledge. A lot of people are, I don't want to invest in real estate because I know nothing about investing in real estate. So how does that kind of relate to a syndication?
Yeah, that's I'm going to go down the path of a story here.
Hmm.
Story slash just general philosophy on life and
Oh,
business.
oh, there you go.
So, the way you can, okay, I'm not even sure where I want to start on this, although
Just do it, man. This is real talk. We'll see
I
how
was
it
gonna
goes.
say,
We'll see how it
this is
goes.
real talk. So one of the goals of mine in the business world is to always connect and surround myself with people that are literally smarter, more experienced, or more knowledgeable than myself.
Yeah.
Because I think you just start absorbing their knowledge, you start learning about them. If you can provide value and get into that group, there's that whole saying, like, you should never be the smartest person in any room.
Yeah, yeah, and you're like
Um,
you're the average of the 7 people that you surround yourself with, or something
Something
like that.
like that,
Something like
exactly.
that.
Yeah. I think
I
it's actually
botched it, but
you're the average of the 5 people you're surrounding yourself
oh,
with. But
5 or
anyways,
7,
Sherwin.
whatever.
Anyways, you always want to level up, your peer group and who you work with and who you interact with. And so, I found myself wanting to get into the syndication world. I wanted to get into larger asset classes. I didn't have a ton of knowledge on how to take down an 80 unit property.
Mhm.
I was doing single family and duplexes. So I wanted to just, again, with very little knowledge, I was able to get into these larger deals because I surrounded myself with people with more knowledge. So if you have lack of knowledge, that shouldn't be a deterrent. It should be the motivation to connect and be more open to meeting these types of people that have experience and connecting with those people. Um, so yes, you may not have a ton of knowledge, but the only way to get that knowledge is to start learning from others. So you have
Yeah,
to hop on YouTube, watch our videos, read the blogs, read the podcasts, go to meetups, talk to people. You have to start gaining that knowledge and connecting with people that have more experience and knowledge than yourself.
yeah,
And that's how I kind of broke through that barrier.
yeah,
And yeah.
yeah. I mean, in relation to a syndication, we have investors that invest with our group Flight that always wanted to invest in real estate, but just didn't know how to get started, or like you mentioned, has no time or money, or they can do other investment types like stocks, Bitcoin, whatever. But when it comes to real estate, that's not their forte. And the beauty about a syndication, if you get involved in syndication, the GPs are the ones that have the experience and knowledge that you can leverage, right? You talked about surrounding yourself, leverage other people's talents of, where you're lacking, right? So we have a lot of investors that invest with us that wanting to get their feet wet. Oh, where's my camera?
Oh,
Oh,
your camera
yeah, there you go.
changed.
Yeah,
There we
yeah.
go. We're
So,
back.
sorry,
This
yeah.
is real. This is real.
Technical difficult.
I also realized, Sherwin, sorry to interrupt you. I
Yeah.
think there may be a chance that I disappeared in this video a couple minutes ago. But
Oh,
anyways,
oh. Well, we'll keep.
I pressed a couple buttons and we'll see what happens. But anyways,
That's right. We'll figure it out.
this
Yeah.
is real talk, baby.
I know. What was I saying? Oh, sorry. Yeah. So investors will invest in the syndication with us just to kind of get their feet wet. It's a good way. It's a good way for investors to sort of get their feet wet and get a taste of investing in real estate because while they're LPs and they're passive, they can be as active as they want. We give them a monthly or quarterly updates of what's going on with the property. If they join us on our social media, they can see our updates, and they can always you know contact my team. This is for my team specifically. I'm sure other syndicators have the same deal, right? Easily kind of by text, email, phone, or whatever to see what's going on with the property and sort of learn the jargon, learn the lingo, and learn what it really takes to manage a real estate property. And it's pretty interesting because we used to have, back before the pandemic, we used to have what's called a ride-alongs, where we will
Mhm.
actually take investors who are interested in investing with us on ride-alongs when we go visit our properties, because our properties are local here in California. It's Sacramento and Stockton back in the day, right? So we would go there, and this is how we sort of weed out the serious investors and not, because we would leave like 5, 6 in the morning because we want to leave before our kids wake up and get there. And the people who are really, we can tell who's really serious will wake up.
Mhm.
They'll find the time. They're like, okay, let's go. I'm with you. And we'll go. We'll be like different trips where we have Riley. Maybe we'll meet with our contractor. Maybe with a property manager. Maybe we'll walk a few properties here and there. And for some, we actually put some to work. Like we had to go to Home Depot and pick up some flooring. We had them like lift, carry some flooring.
Dude,
But
I
then
love that. I would
no,
love to hop on a
but
ride
then,
along with
but
Sherwin.
that's like sort of like, I mean, not saying that all the LPs that invest, hey, come on for a ride along. There's a select few, and we have conversations with about investing in real estate, and they kind of learn that. That's the beauty about in a syndication. You're part of a team now,
Yep.
and you have that access to to your team members, and you can ask them any questions, and we're more than supportive too if you want to invest. I mean, a lot of people invest with us, hopefully to get the return back in a few years to invest in their own deals later on. But it's a quicker way for them to build their wealth rather than saving from their paycheck little by little. They can invest their money, set aside for maybe 2, 3 years, 5 years, however long it takes, and get that big chunk when we sell at the end. You know how that is, Tyler. You just sold a deal. Congratulations.
I was
You
gonna say
exited a deal.
I got a
Yeah.
surprise for you. I actually just got my distribution from that one sale, and then we
Oh.
just sold another deal,
Oh,
the one in
excellent.
Louisville. So
I'm
now it's
telling
time to
you.
reinvest, baby. Time to
Okay,
reinvest.
so let's save that for another episode. But
Yeah.
that's a great episode because a lot of people want, they want cash flow day one. But I bet
Mhm.
you on that sale, the equity you made, how long would it take you to make a cash flow every
So
month to make the equity that you made on those deals? On that,
I didn't run the numbers, but I literally last night I have like this note right here because the money came in yesterday, and I was like, what do I do with this? And I was
yeah.
running all these numbers, but I, I had a chunk of money come in that was more than like my salary at once. It's like, and you're like, then that's when you're like, oh, this real estate thing is awesome.
I keep saying it's like, equity is where you build wealth, not through cash flow.
Yeah.
Cash flow is great. It's residual income coming in. It pays the bills and so forth. But you know, I always tell people like, try to think bigger. Like instead of replacing your monthly paycheck, just replace your yearly salary. So
Yeah. In one
you're
chunk.
sitting good, man. You're gonna
Yeah.
quit now. Oh,
No,
sorry. This
not yet.
this
Not
aren't there.
yet.
This
Not
aren't
yet.
there. No, but see, this is great. We bring back to people like this is great stories that we can share with our team, and this goes back for a knowledge part. If you invest in a syndication, because you're in the deal now, you're in the weeds. You're actually part of the team, and you have part ownership of this 100 unit property or building or whatever. So that's really you can't use that as excuse anymore because
Yeah.
there's ways
Yep.
to do that, right?
And I gotta applaud you, Sharon, because you're the first person I've talked to that actually. Well, I think there's a couple of operators that do kind of those ride along things, but it sounds like you get really involved, which is awesome. But yeah, I think just to kind of reiterate your point there, like when I first got into syndications as an LP on the limited partner side, like just seeing the offering memorandum, seeing the business plan, seeing the budget, seeing how the numbers are run, seeing how
Yeah,
the whole deal is structured, that was just new knowledge to me that I was able to soak up right then and there. So like,
yeah,
even if you don't have the opportunity to do these ride-alongs with a GP group or whatnot, like just getting involved and understanding how these deals are structured is already a huge knowledge gain on anyone's end.
Yeah, yeah, and it can be intimidating. I mean, I've sent like offering memorandum. We'll talk about that more later on. It's sort of like a pitch deck about the property, right? We'll get more detail in another episode about that. But I send these memorandums, and it's intimidating because there's a lot of information, a lot of jargon. And I tell people too, who's interested in investing in real estate, that even if you're not maybe ready right now, you don't have the money, to invest in a syndication right now. I'll put you on the mailing list. I'll keep you posted on our updates on our future offerings. You'll get the offering memorandums, and you can, at the very least, you can learn the jargon. You can look at the numbers. You can look at the how it's structured, how we structure deals, how we communicate with investors. And then when you're ready, you're good to go. You've
Mm-hmm.
already reviewed maybe a few different offers beforehand. You already know what's this, what's that. And if there's anything that you understand, you can just contact the GP, contact us, and we can get on the call, or we can go through an email or discussion. That's what's great about, I guess, well, I'm speaking for Flight, my team. We're a little, we're I don't want to say boutique, but, very hands-on. We're very approachable, and we like to find ways to help investors. Even if you're not interested in investing in a syndication, maybe you want to do flips or whatever, I'm more than happy to open my network of people that I know. I know you have a great network of people too, but that goes back to the knowledge, right? Just having a team. So you have like no time, no money, and not enough knowledge. And the fourth excuse I always hear about people not investing in real estate is the fear of failure and taking risk. So how does
Whew.
that how does investing in a syndication sort of mitigate those risks or ease that fear of failure?